Good morning, guys. Welcome to today's market snapshot session. My name is Samson Mzera, and I will be taking you through the events that have happened this week as a wrap up and what's going to happen next week. So we've had a couple of central bank meetings, and those are important in determining the trends until the next meetings. So at least we now somewhat know direction. And number two, today we also are expecting a very important reading, which is the PCE indicator, which basically sums up inflation trends for the US. So those are the two things that we'll be looking at, and that is going to define our setups for today, and also first off our setups until 4:30, and then after 4:30 today, what you're going to be looking forward to the following week. Yeah, so just a quick wrap up. We'll be looking at Japanese yen, because we had a meeting on that. We'll be looking at the Bank of Canada comments. So we'll also look at the USD card and the direction on that. And gold, we'll look at a little bit of gold, US 500, Euro USD. So we'll end with those 5 pairs for now, but they're good enough for us to continue summarizing the events for the week. So remember, it's very important that you know the fundamental bias so that you can determine whether the trend is in line with that bias or it's not in line with that bias. So that's what you're looking at. So if you can also just say hi on the chat section. Charles, hi. Billy, hi. Yeah. Okay, so let's quickly move to the calendar and talk about those meetings one by one. Before we talk about the Fed meeting, not the Fed meeting, but there's some comments from the former Fed, Texas governor, Texas Fed governor or something like that, that made the dollar to really weaken a bit in the middle of this week. We'll also be covering that. But for the time being, let's start off with what happened from Monday, and then we bring it all the way down to today, where the core PCE is expected to be announced. So Monday was rather quiet, and a lot of the events for the week started on Tuesday with the Japanese Bank of Japan monetary statement. So just to bring a little bit of context onto this, remember that the Bank of Japan or Japan in general, has negative interest rates. So if you look here, you can see that of all the first world economies, it's only Japan that has negative rates. Yeah, because it has negative rates, then it simply means, if you think about it, that if someone, for example, wants to deposit and in a perfect economic world, if someone wants to deposit money in the bank, instead of you being charged an interest, you are deducted an interest. So it's really a nudge to make people spend more and have less cash or savings in the bank. And it's also discouraging people from holding Japanese yen. That's why if you have negative interest rates, and the fact that they've been having negative interest rates for long, then you can see that the USD JPY pair over a daily or an even larger time frame, you can see that it really weakened against the dollar. So we had this massive move for the past 2 years, and that's what the market has been keen on seeing if we will adjust. So just a minute. So yeah, the market has been very keen on seeing if prices are going to adjust and if their policy is going to go back to normal, because negative interest rates is really not good for the economy, neither it is good for the currency. J Scott, good morning. Mana, good morning. Robbie, hello. Yeah, so it's good to see you guys. Let's see what the markets have for us today. So as I was saying, because the Bank of Japan has been having negative rates for long, we've had this massive uptrend from when it was at 106 all the way to around 156, where it peaked, and now it's just been hovering there. So following the Bank of Japan comments, you're really trying to see, are they going to finally start changing their policy to a more positive interest rate and to at least tighter policy, while other banks have been cutting, or while we anticipate other banks to start reducing the interest rates. The focus on the Japanese yen is when is the BOJ or the Bank of Japan going to start increasing interest rates? And that is really going to affect the price or the value of the Japanese yen. So if you look at these comments over here, or these news snippets over here, you can see that there's a lot on when they're going to stop with the very ultra easy monetary policy. So I'm going to just go to one article which says the Bank of Japan opens the door to ending negative rates, but the timing uncertainty remains. Yeah, so basically speaking, everyone is trying to see when are they going to finally start raising their interest rates, because they've been negative for the longest. Yep. And this is going to be one of the best threats for the year, because if another central bank is cutting interest rates, say the US starts cutting interest rates and the Bank of Japan starts cutting rates, that means there'll be that differential, and it's really going to affect or to reverse this entire move over here. So you expect this entire move now to come and change once they start cutting, once they start raising interest rates, while other central banks start cutting interest rates. Remember, there's that interest rate differential that you're going to look at when you're looking at this. Yeah. So in that case, that's all you're trying to see for the Japanese yen. But this is going to be a really good trend for the year, and it's something that you should be following mostly whenever they're going to have the next BOJ meeting. So let's just jump back into the article and see what it says. Okay, so the Bank of Japan stood pat on monetary policy today, as widely expected. That means they didn't raise interest rates. They were reading their interest rates, so they didn't raise them. Yeah, but the market is now paying attention to a more positive tone on wage and inflation outlook. Remember, these are the key drivers of interest rate changes in the market. That is inflation and wages. In the US, that's NFP and CPI. So those are usually the key drivers. So outlook for financial year 2024, which lays the groundwork for policy normalization. That means when you're going to finally start seeing positive interest rates, we will still see a slightly higher chance of a fast hike. We still see a slightly higher chance of a fast hike in June than in April. Yeah, so this is just an estimate of when they see the BOJ starting to raise interest rates, and they're saying on June. No surprise that the BOJ kept its policy rate and 10-year yield target unchanged. We think the Bank of Japan's modest change in its view on inflation hints that the policy normalization is approaching. So you can tell that a lot of traders, a lot of analysts saw that usually when you're looking at when the bank is commenting on such issues, you're trying to see whether they hint or they say anything that's going to suggest you're going to start cutting or raising interest rate in this case soon. And a lot of analysts are kind of saying that the BOJ assessed. So let me just open the full story. So we go through this. The BOJ assessed its statement that the likelihood of achieving the price goal has continued to gradually rise. So they've been having negative interest rates for a reason. Yeah. And once they have accomplished that target, then that's when they'll start increasing interest rates. Yeah. And the tone is that might happen soon. Yeah. So if you look at the charts, now let's translate this to the charts, especially the 4-hour time frame. So this meeting was on just a minute. So this meeting was on Tuesday. So this is Friday, Thursday, Wednesday, Tuesday. So we had the meeting on Tuesday, and we had this drop because the meeting came in the morning. So just a minute. Let's see what time this meeting was. Yeah, it was around 6. Yeah. So you can see that based off of that, so based off of those comments, we had this down push here. Again, the downwards reaction was from the comments that we might start seeing interest rates rising soon. Remember that we're anticipating a reversal of this entire move. So that entire uptrend, that's what we're anticipating. Once they start raising interest rates, then it's going to be more apparent that this trend is going to start reversing, and we go back to the lows that we've had usually for Japanese yen. So that's very important. So this reaction came in around the morning, and you can see even from the 4-hour time frame that we have had a change of character. So eventually during the week, we've had this double top that are printed here. That means we failed to go higher. Yeah, and then the market cleared these lows over here. So we broke down these lows. Again, there's that anticipation that might start seeing that reversal coming in. And once we broke those lows, we finally saw a change of character on the 4-hour time frame. Now, as a trader, obviously you have to use your technical analysis. Yeah, we'll talk about gold. Why is gold not that bearish? Okay, so we'll talk about that in a minute. Let's first finish with the currencies, and then I'll talk about the commodities. So we swept that low, and at the moment, you're waiting for confirmation that this indeed is the beginning of a downtrend. So we're not going to speculate a lot because number one, we still have the PCE today, and we'll talk about why the dollar strength is being supported. I think that's going to cover also the remarks on gold. Okay, so there's that. So what I'll be looking at on the short term is if we have any substantial breaks or change of characters, that means a change of the market direction in the short term, that's going to support the long-term fundamental outlook of the market. That's when I think it's ideal to start looking for selling opportunities. If that doesn't happen, then we'll wait to see for more information. But again, for those swing traders and those position traders that hold for the long term, I think the Japanese yen is a good candidate to do so for the rest of this year. Remember, you always have those really long-term trades, and this is likely going to be one of them. In the event things go as discussed, that means all the fundamental factors align. Yeah, so that's what's happening with the Japanese yen. Let's move to the next currency. So I'm going to talk about the direction on each currency before getting into what the dollar is going to do today, or how the dollar is going to behave today, so that now we can pair that up. So if we expect maybe a strong dollar and you're also expecting a Japanese yen that is strong, then it's going to lead to a sideways market. So there's no point of looking for trending trades at that point. So you always have to know how to match all of those expectations. Okay, moving on. On Wednesday, we had our Bank of Canada policy rate decisions. And with these other economies, remember they have interest rates that are very high. Yeah, so Canada is at it has the third highest interest rate. So you can see it's at 5%. So there is this really just talking about which central bank is going to start cutting rates first. We'll talk about gold. For those who are asking about gold, let's finish the currencies first, and then we skip to the commodities afterwards. So if you look at every trader now is looking at which central bank will start cutting rates, because apart from Japan, all the other central banks have really high rates. And if you talk about Canada, this is what made the Canadian dollar to weaken this week. So Canada edges towards a rate cut in the second quarter. Subtle dovish. So I'm reading from here. Subtle dovish shifts in the Bank of Canada's thinking. Dovish meaning the attitude is shifting towards more of easy policy, cutting rates, things like that. So they only do that when the economy is showing signs of weakness. Just a minute. Okay. Yeah. So subtle dovish shifts in the Bank of Canada's thinking, and a weak growth backdrop give us increasing confidence that inflation will fade and cuts will come in the second quarter. I usually have the YouTube channel open on a separate device so that I can see what's happening on the chat section. So I'm just trying to adjust that. Okay. Yeah. So you can see that with most of these economies, the thinking is by around June, most of them will start cutting interest rates. So that's what the market is sort of looking out for. What are the hints that are there? So there may be room for a rebound in the short term, card rates in the near term though, and the SD card could stabilize, but the loonie remains less attractive than the likes of Norwegian krona and Australian dollar. So remember, what we discussed in December is that commodity pairs are going to perform very well this year. And commodity pairs are pairs or currencies whose countries export a lot of commodities. First one, of course, is Canadian dollar because they export oil. So it's very related to oil. Also Norwegian krona. I mean, Norway also has a really big reserve of oil and they usually export. And then also Australian dollar. So we say that in an environment where central banks are cutting rates, currencies whose countries have commodities are going to be very beneficial. That means they're going to improve quite a lot. Yeah. So the options are between Canadian dollar, Norwegian krona, and Australian dollar. But with how the situation is looking at in Canada, then it's likely that maybe the Norwegian krona and Australian dollar are going to be better suited for improvements this year than the Canadian dollar. And that's what that statement is here. There may be room for rebound in the short term with card rates in the near term, and the USD card could stabilize, but the loonie remains a less attractive. The loonie remains less attractive than the likes of Norwegian krona and Australian dollar. Dovish hints point towards cuts that the Bank of Canada left monetary policy unchanged. Obviously, the target overnight remains at 5%, and the rest. So because of how the economy is in Canada, and that is weak growth and slowing down inflation, then there's a high possibility of them cutting rates. Remember, lower rates, weaker currency, higher rates, stronger currency. It's very simple. How do you go about trading new highs or new lows? Any trading instrument, for instance. Okay. So I'll answer the questions. Just keep them coming. In the meantime, so those dovish hints, if you look at this, just a minute, let me change this to the charts. So if you look at USD cut, off the back of those comments, we had a very weak Canadian dollar. So remember, US dollar gained against CAD because of those very comments that they might start hiking or cutting very soon, and that's why you're having that. So if the dollar prospects remain strong today, because you have the PCE coming out at 4, if the dollar prospects remain strong today, then we have this zone over here that could be a potential area for buyers to come back into the market and take this market higher. So the zone I've highlighted at 4-hour time frame is a very good potential areas for buyers to come back in. Mainly because that's where we had our first push upwards. If you look at the hourly, that's where we had our first push upwards, and it seems as though the market is coming back to that zone just to collect the remaining orders and take the market back higher. So in that case, if we have the PCE reading coming in favor of the dollar today, and because we have the PCE reading to confirm this. Yeah, so the market at the moment is mixed because every central bank wants to start cutting. So it's sort of a mixed ball game of which one is looking more problematic, which economy is looking more problematic, hence a weaker currency. But that's really what you're looking into. Just asking, what if they wake up every day and make in accounts? After Fed starts cuts, can the strategy yield me something? Yeah, I mean, that's on the Japanese yen, I'm guessing. I mean, yeah, so if you want to be a swing trader, then obviously you can average your trades like that. I know it's called dollar cost averaging, but you can average anything, any asset. But really what you're talking about is, if you're trying to trade on the long term, then you're probably looking at a weekly or a daily or a monthly time frame. You're not really looking at what is happening day to day on the charts. So yeah, it's very possible, but I'd recommend you just use a higher time frame to do your technical analysis. Remember, your technical analysis always have to be in line with your fundamentals for it to make sense, especially on the long term. Okay, so this chart or this pair seems to still be heading lower. So what you're looking for, it might be very quiet. That's number one. It might be very quiet today until we see the PCE reading coming out. Remember, when the Fed is talking, they're always talking about the PCE indicator. They even talk about the PCE more than CPI. Yeah, so it's a very good reading to look into when assessing what the Fed might do. Yeah, so again, on the lower time frame, I'm really just looking for a change of direction in this market and confirmation. So if I'm using market structure or whatever strategy I'm using, all I'm looking for in this chart is a change of direction of that downtrend and the possibility of a nice setup if the dollar comes in, if the PCE today comes in positive for the trade. So that's basically it for Canadian dollar. So we've talked about the Japanese yen, and now we've talked about the Canadian dollar. Okay, then yesterday we had another central bank talking, and that is the ECB. So we didn't get much from Europe. It's basically what they just said in December. So it's not much to change the direction of Euro USD. So for example, here I was going through the comments. Yeah. So let me just, the press release with the policy announcements is almost a verbatim copy of the December statement. So they didn't really change much from the last meeting. So everything remains as is. The ECB only dropped two phrases that could be interpreted as opening the door for rate cuts. Remember, you're still looking for rate cuts. The December comments on domestic price pressures being elevated and a temporary pickup in inflation. The fact that these two phrases were dropped, however, could simply be linked to the fact that there are no new forecasts. Yeah, so you're seeing a sort of an easing off of price pressures, which is just inflation. And obviously, if inflation is going to be continue going lower, then there's a high likelihood of them starting to cut. Although that's what they said in December. So it's really a wait and see game. So if you look at let's just go to that. So the chart that I'm least sure about today is Euro USD. So I'm not going to, from a fundamentals perspective, I'm not going to belabor so much on the direction, but this is a chart that I am the least sure about. That is, the comments are very mixed, so it's very hard to make an interpretation of the direction in the market. However, from a technical standpoint, we did mark these levels last week. Remember, on the last week's market snapshot, we said this is a zone that prices would be heading for. That is what we said last Friday. So I've left this chart unchanged from when we discussed. And indeed, our markets or prices came back to this zone to fill this imbalance over here. And today, probably or more likely than not, we're just going to rely on the PCE to know if the Euro USD is going to fill back some of these gaps that have been left on the chart. Remember, we had a very wild run on Euro, both on, was it Wednesday? And Tuesday, the euro was just moving like crazy. It was moving like gold, basically, for the better part of this week. We had this really massive move downwards. I think this was on Tuesday. Yeah, and then on Wednesday, we had this big move again upwards. So the euro was just making really insane moves for the week. And the important thing is it didn't fundamentally change the direction. So technically, it's still sideways. Yeah, because there's a lot of confusion with where the euro is going to go at the moment. But the PCE should provide us with temporary direction. That means if, for example, we see PCE coming in lower than expected, or I'm not pointing at the charts. Oh, sorry. Let me go back to the charts. I think I was still on the news. Anyway, so let me just check that again. Looking at the 4-hour for Euro USD, again, there is a bit of confusion with regards to the direction. Yeah. Last week we had marked these levels. We had an area of demand here. This is where prices started rushing upwards. So this was our key area, and that was coupled by the fact that we had this imbalance happening over here. So we said there's a high likelihood of us continuing lower to this point over here. So that was last week, which if you followed, then probably you had a good trading session with Euro USD. However, this week it was mixed, and the Euro USD was making some really crazy moves. So on Tuesday, we saw the Euro going really low. And then I think it was comments from Bullard, the former Fed chair of, is it Texas? Yeah. So we had this massive downwards movement, and then the next day we had this correction and it started going up. And then now the next day we had the ECB meeting coming in to take us lower. So you can say from just yesterday's move that the market is interpreting what they had in terms of the meeting yesterday as bearish for the euro. However, we need more support. That means we need more evidence if we are at all to build a bearish case for that means us looking to take the euro lower. However, if we see some positive news from the dollar, if you see some positive, so let me just remove this and remove this. I think we no longer need this channel. If we see some positive news from the dollar today, then this is a really good bounce off area for us. Sorry, if you see some negative news, that means if the dollar comes in weaker than expected, then this is a really good area to see prices go back up. Yeah. Again, it's very mixed because of ECB wasn't really changing anything from last time. So I mean, but if the PCE comes in lower than expected, then that might indicate a weaker dollar, and that might indicate some sort of support over here and a reversal. I think in the short term, that's going to create a good reversal higher for Euro USD. However, if the PCE does indeed come in stronger than expected, then it's likely going to remain mixed. I'm not going to anticipate us going lower, even though if it did, this is another area to think about over there. Yeah, but that's besides it. We are looking at the reaction here. So far, what we are seeing is a positive expectation on PCE. That means you're expecting a higher reading on PCE. So that could mean until 430, that could mean some bullishness, some bearishness for euro. We're expecting the PCE to come in at around 0.2. Yeah, and off of expectations alone, the market usually moves. So you don't have to wait for the news to know the direction. So if the expectation is higher than the previous, then it's going to provide some strength for the dollar until when the announcement is made. Remember, when the announcement is made, either those expectations are corrected or they are affirmed. That's why we see the reaction is okay. So I think we've discussed in length about the euro, but go for the clearer. For me, I'd go for the ones that are very easy or clear to see. That is, if we're expecting, we've already discussed about, or we've already talked about USD JPY and USD CAD. Yeah, so we've already talked about USD JPY and USD CAD. We've said Japanese yen has the potential to regain its strength this year, and we said Canadian dollar looks very weak. Based off of those two, you know which one to pair with if we have a weak dollar today, and you know which one to pair with if you have a strong dollar today. Yeah, I think that's going to be obvious. I think the chart is not visible. Is my chart clear? Yeah, I think it's clear. If you can see my chart, just say so on the chat section as we continue. Okay. In the meantime, let's move on to commodities and metals. And we're going to talk about gold finally. For those who are trading gold, if you can see my chart, just mention it on the chat section. Or if you can't see my chart also, just say so on the chat section. Just code you're saying the chat is not visible. Okay. While that is happening, I'll continue. So gold. So if you look at the overall direction of gold for the past 1 month, for the past couple of weeks, yeah, it's generally been losing strength ever since it got above 2000. So we briefly went to north of 2000 and it seems as though we're coming back down to 2000. So there is some bearishness. There's that reluctance of gold going way above 2000. Yeah, so we're going to really need a lot of convincing, but I think it's going to be very much possible if we start seeing a weaker dollar for the rest of the year. It's going to be very much possible for us to get there. So a lot of this is pegged on what happens with how early the Fed is going to start cutting. And a lot of guys are saying it's going to be on March, and some guys are saying it's going to be in June. So it's a wait and see game. But today we have PCE, and that might provide some direction into what the Fed is thinking. Yeah. So if we expect the dollar to be very weak, then this trend should continue going down. And if you expect the dollar to continue being strong, then that's the direction. So let's look at the PCE first, and that will also answer the question on why the currency is not as bearish, or why gold is not as bearish as it should be here. So let's talk about today's reading. Let me just share my screen. Okay, so today we have PCE. So I usually think PCE is more important than CPI, but people usually like trading CPI. But PCE is what the Fed usually mentions when they're talking about inflation. And if you look at PCE, it sort of has been mixed. So the past 1, 2, 3, around 4 months, this is the PCE for November. So like the PCE for December comes in January, the PCE for November comes in December, and the like. So the December one was the PCE for November. And usually it's not as aggressive as CPI. CPI usually has very huge variations, huge changes, but PCE is more subtle because it uses a better estimate of price. Just a minute. Yeah, I hope I'm visible, audible. Okay. So having said that, today's expectation is we have PCE falling back to 0.2. So it's a slightly higher reading, not so big, but slightly higher reading. I don't know if that will be enough to change the opinion, but the opinion of the Fed, but because we're expecting a slightly higher reading, then we're expecting some strength on the dollar until this time. Remember, in the market, people tend to act based on expectations. If I'm expecting a road to be constructed somewhere, I'm going to start buying a piece of land there even before that road is constructed. So usually markets adjusts to expectations even before the news comes out. Yeah, and that's why we're saying today that if you're expecting a higher PCE reading, that means the dollar should somewhat find some strength before 4:30. Then at 4:30, when the news comes out, then that's when you're going to know the actual direction. Is it that indeed we have a higher reading, or it's going to come out lower and we're going to have a correction of today's movement? And that also explains, it partially explains why things like the euro and GU today, when we woke up, are slightly lower. Yeah, so that's GU. If you look at euro USD, we have some weakness there also. In the morning, we've come off with this slight push downwards. Yeah, so that means the dollar is somewhat finding some support over there. That means some strength. Yeah, so it's likely going to be that way. You're going to have very limited moves upwards based off of that only. So anyone who's thinking of going long euro USD or GU or anything that is against the dollar should be very careful when trading, because dollar is going to find a bit of support until we know the exact reading of the PCE at 4:30. So that's one way to look at the charts today. I hope I'm on the charts. That's one way to look at the charts today. Yeah. Okay, so we've discussed all that, and then that also applies for gold over here. So you're going to have a very limited upside again, but we have some very interesting targets for gold, because we have a level over here, short-term level over here, and we have another interesting level down here. Yeah, so these can be interesting areas to see how this market is going to play out. So if you have that PCE reading in favor of this trend, is a downwards trend, and it's going to be in favor if it's higher, then we should expect gold weakening, and probably this level here will become a possibility. That means the price is getting to that level. But if we have lower than expected reading, then it's going to be even more difficult to interpret gold, because it's not going to be obvious that it's going to go higher. It's going to be a bit harder to look at it. Anyways, I think that's it with the charts. With regards to S&P 500, so the thinking is, this is what we've been discussing at the sessions here. Most of the times, if you're trading indices, they end up positive a better part of the year. So if you bought S&P in January last year or last year but one, more likely than not, it usually ends up positive. There are very few years where the S&P ends lower than when it was in January. Like this was 2022, and that was because the Fed was then starting to hike interest rates. So there are very few years where you find the S&P is lower. So having said that, because this is a year where we're expecting cuts finally, then it's going to be very interesting to see. Yes, we know the direction is up, but the entries are what you need to be careful with. So I've marked that previous high that the S&P broke, and now we are in new territory, new highs for S&P, and basically looking for potential entry points for long-term swings on S&P 500. Okay. Are there any options expiring today? Which other question was here that I didn't answer? How do you go about trading new highs? So we have a strategy playlist on the channel. So you can just go to market structure. There's a YouTube video called market structure on the FX Pesa strategy playlist. So you can just look at how to trade highs and how to identify swing highs. That's market structure. Moving on, options. Are there any options expiring today? So let's have a look at that. So last time I remember I left without question, looking at all the questions. So today I'll try my best to look at the chat section while we wind up, that is. Okay. So let's go to options market. Remember, options markets is usually used by institutional investors because it's a very large, or the orders are placed at a very large scale. So I hope you can see that. Those are today's orders. So you can mark out these key levels, especially the ones highlighted in bold. So we don't have any key levels for USD JPY and GU, but we have quite a number of levels. I hope my chart is visible. We have quite a number of levels on Euro USD. So at 1.08, are these levels even close? Let's see where price is at the moment. Sometimes the levels are very far from the actual price, so there's no point. 1.08, so that looks very close. Let me see. Yeah, actually, if you look at Euro USD, the point we have marked here, 1.08, if you look at the options markets, it says there's a very huge option contracts order at around that level, 1.3 billion euros. So that's a good or an interesting level to look at. And then we have another area at 1.085 with another huge order over there. So remember, options are contracts that expire, and these options are expiring at 10 a.m. New York. So 10 a.m. is 6, is it 6 or 5? I think one of those two. So either 6 p.m. today or 5 p.m. today. So those levels become invalid after that. So make sure you take note of the expiry time. Yeah, so those are key areas you can look for on Euro USD. Let's see if there are any other pairs. We've talked about USD CAD. I'm seeing there are also key levels. But these are, yeah, so at around 1.3390, you can also mark that, and 1.33 flat. So those are levels you can also watch out for if you're looking at those currencies. Japanese yen, there's nothing. GU, there's nothing. So only look at levels if they're very big. If they are small, then you can just leave them. So this is Canadian dollars, 1.2 billion Canadian dollars. Yeah, I think that's pretty much it for today's market snapshot. What to watch out for next week? Yeah, Australian CPI. I'm trying to see if we have. Of course, next week's meeting from the Fed is already expected. They're going to hold rates. I don't think there's going to be much from that meeting. Do you have non-farm next week? Yeah, we have non-farm next week. So NFP is next week, first week of the month, February 2nd. See how that goes. Having said that, thanks so much for attending today's session. You can always just rewind and go through it slowly while doing your own analysis or confirming your own analysis. Yeah, and having said that, I hope there are no other questions. Usually there's a lag between the time I see the questions and the time I'm done talking. So that's why I end up not reading some questions. But having said that, thanks for everyone who came in for today's session. See you next week's sessions. How to combine fundamentals and technicals. Well, there's a question on that. So fundamentals, you use them for bias, and that's what we've been talking about. When you're talking about long-term direction, you're trying to see, like, for example, if you rewind, you've talked about USD JPY. You're trying to find what is a long-term trend, and then from there, you use your technicals to just enter at optimal price levels. Basically, that's what we're doing. Okay. Having said that, thanks so much for attending today's session. I believe there are no other questions. Again, there's usually a lag. So when I end the stream, I've not seen the question. But I think that's the last question. And see you all next week's market snapshot.